Hello everyone and thanks for joining me in Fundamental Signals. Today I want to talk about one of the most undervalued stocks right now in the market, and that's Adobe. I'm going to show you why it's so undervalued. First, let's take a look at the P/S ratio against the 2 years average. Looking at this chart, there's no need for me to explain. When this P/S ratio versus 2-year average goes below -1 standard deviation, that's when you have these dips in price. That's when you have pullback, and then after that you have move up, back, up, back here, up again. Down here, we have like some stocks stay there for a while, but eventually you have this move up. And so on, like here, going down, back up. Right now, this indicator is sitting at negative 1.58. 1.58. Now, it stayed here for a long time. It's been here since December 2024. It's been more than a year. It's been brutal. January 2025. January 25. Today I'm talking to you. It's like May 2026. May 2026. It's been a long time. It's been undervalued based on this indicator, and it might stay undervalued for a longer time. I'm not saying it's over. I'm saying it's undervalued. When do we know it's over or almost over? This P/S ratio, whenever this broke above -1, that's when you start to getting some good rallies to the upside, like in May 2023. After that, we basically go from $345 per share all the way to 619. Almost double. Not quite, almost double. Again, November 2019, we go from $289 to 378. We bend back down again. We go up back again from $340. Goes all the way to 516. This happened over and over again in the Adobe history. I'm not going to go over them one by one. I just want to show you a couple of examples. And I think we should wait until this P/S ratio go above -1 so we can time in better. Like you can DCA into this, but it's going to be long. It's going to be long. It's not going to be easy. You see your portfolio going down every day. If you're okay with that, no problem. You can buy it. You can DCA into it. But it probably needs some more time, in my opinion. So just some stats here, right? So if it goes above -1, right? Cross up -1 and you buy the stock and you waited until it became quote unquote overvalued, right? It goes above 1 standard deviation. That happened 88 times in the history of Adobe. On average, your gain would have been 45% if you did the trade this way. And it would have taken, on average, 300 days. And only there is 6% chance that you would lose money and 94% chance that you will gain something and 78% chance that you will gain above 15%. Above 15%. That's number one. P/S ratio undervalued massively. However, we need to wait longer, in my opinion. Second, EV EBITDA. This one tells us the same story. This one, when it goes to again this green region, it shows that the stock is undervalued. And right now, we've been in this green region for a while. Again, from same January, and right now we are sitting at, what is it, 2. It should, whenever it basically go down to 1, so this is different. So crossover, cross from above, cross down from above, from 1, and we wait until this indicator show us overvaluation, cross down from above from -1. With this indicator, if you based your trade based on this indicator, the gains would be 25% on average. Sorry, 27% on average. It happened 122 times. So this indicator has more noise. It's more noisy, going up and down much more than the other one. That's why you get more occurrence of this indicator giving the signal 122 times, and you would lose money, let's say 15% of the time you would lose money, but the rest of the time you would gain something. 64% of the time you would gain more than 15%. This one shows us undervaluation. P/S ratio shows us undervaluation. Next one, I'm going to show you this revenue momentum oscillator that shows the divergence between revenue growth and price growth. Again, since January of 2025, this indicator has been in green zone. It has been in green zone, stayed there, because revenue has been growing. Revenue has been growing, but the price is dropping. And we can see it here. And guys, look at this. It keeps on growing. It's not stopping. It's growing in the future. So the estimate is that it's going to go up. But the price does not care. Still going down. Now, this is where you get these massive opportunities in the market, but again, doesn't mean if you see this, you buy now, you're gonna become a millionaire or something. It just means that you need to keep an eye on this and see when the price start going back up, and then because this gap is getting larger and larger, there will be more and more upside to it. Okay, on average in the history, if you were to buy this stock, if you were to DCA when this indicator above 30, right now is sitting at like what, 40, 50. If you were DCA, if this was above 30, and then exit when it goes below -30, when it become overvalued, meaning the price is going higher faster than the revenue is growing, on average you would gain 71%. However, the wait time is 840 days on average. Another thing I want to show you, I just want to go through some of the metrics and show you how crazy is this. We saw the revenue. You see the revenue just keep going up. Like this line is just keep going up, right? That's number one. That's same for EPS, right? Keep going up. And then we can see that forecasted EPS still going up, doesn't show any sign of weakness. Free cash flow just keep going up. Price going down from January 2025, but free cash flow still going up. Operating cash flow, same story. up. What else? ROIC. Keep going up, right? Keep going up. The price is going down. What else? Gross margin. Trending higher. Operating margin. Good. Still trending higher. Net profit margin. I mean, this one you might say, well, stay the same, but you cannot have 100% of it, right? Cash per share. Trending very, like, look at this divergence. So look how from 2019, look how the price been following this, and then suddenly from January 2025 it broke. So that's where the opportunity is. Return on investment asset. Operating income. Just keep going up again. And share outstanding is going down, which is a good sign. So as you see, many of these metrics are pointing to a direction that price does not follow. Now I showed you on the graph, but let's look at the numbers. So the correlation with price. So fundamentals that correlated with price. First, revenue. Overall, revenue had very strong correlation with the price. But in last 5 years, especially last 1 year, look at this one year, the correlation been negative. That means there's something wrong. That means the price, this negative correlation cannot go on forever. You cannot just have revenue coming into a company and the stock price going down forever. It might keep on for some time, but not always. EPS, same, you can see it here. Operating income, we're in negative right now. So overall, I think Adobe is one of those stocks that need more time. It needs more time, but there is a very good opportunity here. Hope you like this content. Please give this video a thumbs up and subscribe. Thank you.